guys, how are you? Good evening. I hope you are in good health. I hope you are in good spirits. And if you are not, hopefully this conversation will lift you up and restore your faith in your financials. Today we're interviewing Courtney Richardson, who is the founder of the Ivy Investor. She is also a lawyer. She has taught thousands of women how to navigate the investment space. And so this is one of those talks you want to have your notebook ready, because it's going to be a lot of information, a lot of great conversation, and definitely things that you want to take notes on. Hi, everybody in here. How are you? Welcome, welcome. Courtney has also been featured in the Huffington Post, in My Fab Finance, in Forbes. She was named by Black Enterprise as the top finance professional on Instagram. So the accolades are there, y'all. So we are speaking to somebody who has the credibility. She has an amazing personality, and I can't wait for you guys to meet her and for her to share all these gems with you, because this information, why do I always do that, guys? I always flip it when I'm trying to post a comment. This is information that we all can use right now, and I want to make sure that you guys are taking full advantage of it and taking your notes. Okay, I see Courtney sent me a request, so we are going to... Hello, everybody. Welcome, welcome. Good evening. Hi, Courtney. How are you?
Good. How are you?
I am loving the red lipstick.
Thank you.
Fabulous, darling. Fabulous. So thank you so much for being on the show. I'm really excited to have you. And for those who don't know, Courtney actually spoke at our second annual Women Who Roar Summit last year at NBC Universal. She actually sat on a panel talking about a very popular topic, which was investing in cannabis and how women can get involved with investing in cannabis. And we will talk more about that in detail. But shout out to you for coming back, for lending your knowledge again. I appreciate you very much. So first, I want to start with, this is a question I had that I've been thinking about. And I was like, I wonder where she got the name for the Ivy Investor. Where did that name come from?
So I am a member of Alpha Kappa Alpha Sorority Incorporated.
Okay.
And
ooh, you froze there a little bit. Your Wi-Fi might be a little messed up.
Did I? Am I in? Can you see me? Am I there?
Oh man, I see you. Don't let us have a Teddy Riley moment. Don't let us have it.
All right, hold on. Can you see me?
I see you. We good.
Okay. Oh my goodness. I was like, oh no. It is so funny. So to answer your question, the Ivy Investor comes from the Ivy plant, which is associated with Alpha Kappa Alpha Sorority Incorporated. But more so, the Ivy plant is a really strong plant. Have you ever had it grow on your house? We had a couple of years ago, we actually had to have ivy taken down because it will eat away at your brick. It's such a strong plant that it will eat away at your brick. And I think it's so interesting to have those conversations, because especially like in times like this, you have to be a very resilient and very steadfast kind of focused investor. Just like the little ivy plant, because ivy plant is going to go.
Okay.
So
I did not know that it was that deep. I honestly thought, I was like, oh, Ivy League school, you know, Ivy, that name is usually associated with a certain level of pedigree. So I was like, oh, so this is like high profile investing for, you know, the elite or something. But I love this description and this reasoning so much better than that. So I appreciate that. Okay, so I want to know more about, this is a side hustle for you, right? The Ivy Investor, because you are also a practicing lawyer.
correct.
In a field that, girl, God bless you. Tax law?
Yeah.
Girl. How crazy is your time right now? Do you do tax law for institutions, or who do you do tax law for?
So I do enforcement. So basically I'm on the government side.
Okay.
So that's kind of where I am, where I live. A lot of people are like, is this a busy time of year? And I'm like, no, we collect taxes all year, player. But to your point, a lot of municipalities, because I work for kind of on the local level, a lot of municipalities have said, you know what, we're going to have to push back our dates, which means that our collection cycle is off, like really off. Mm-hmm. And that being said, is that we don't know when we're going to get right. So.
Okay. So it's not crazy on your end on the tax side.
So it's starting to get that way because of COVID, but it's not necessarily because, oh, it's tax season or something like that, if that makes sense.
Got it. Got it. All right. So the IB investor is what you do on the side, and you spent about 15 years in the finance space as a stockbroker, right?
Yes.
So what firm were you with?
So I was with, I started with Steptoe and Johnson, and that is, I think it's an AmLaw, like AmLaw 100. It's kind of like one of those things that you're like, oh, that's a very prestigious firm. It was I think it was the 12th largest energy firm at the time in the nation. So we were doing a lot of energy law. I kind of started my career as an oil and gas attorney, which is kind of just real estate on steroids. But I did that, and I was like, who's child don't like this?
Yeah, yeah.
So I ended up going to get my LLM in taxation. I came home because I was in West Virginia. So I came home and I was like, okay, I'm going to go get my LLM in taxation from Temple, and then we'll kind of go from there. Ended up working for the Commonwealth of Pennsylvania. Then I ended up working for the city of Philadelphia. And now I kind of work for a private firm that kind of acts as a solicitor for small towns and small cities in Pennsylvania.
Okay. So on the investment side, which to me, from, following you on social media and working with you in the past, to me, it seems like that's your baby. That's your passion. You love to teach women how to invest, and more importantly, how to invest wisely.
Correct.
And so right now, given the time that we're in, I would love for you to offer advice about how women should be thinking, or just generally how people should be thinking about how they are making investments. But if there is something particular to women, like women should be particularly thinking about this, I definitely want you to include that as well.
So I think the biggest thing is that I've noticed two types of investors that are kind of hitting me up in my inbox, my DMs, my email, ding, ding, ding. It's like, oh, hey, wait a second. So I've noticed that a lot of people are like, I want to invest, and I'm just going to invest in something that I heard about. And then other people are like, I want to invest, but I just don't know where to start. So I've had people like, oh, should I invest in oil? I'm like, do you know oil? Like, is that your thing? And they're like, no, it's just hot in the streets. Like, oh, I don't invest in what's hot in the streets. I just don't, and I won't. And the thing is that like I said, I was oil and gas attorney, when I first started in law, because I was a stockbroker before I went to law school. So this is my second career.
That's what I mean. Where were you a stockbroker? Where were you?
Maryland.
Trading?
I'm sorry, Maryland.
In Maryland. Okay. And you were doing what type of investments as a stockbroker?
So I was, let me clarify. So I was working as a high net worth advisor for Merrill Lynch.
Got it.
Okay.
So,
and I was
managing the portfolios.
Correct. So my average portfolio was about $3 million. Okay. So that's what I was doing when the stock market crashed in 2008. Like, that's literally what I was doing.
Okay.
And I was like, this is awkward. And then I was laid off about 6 months later. So the market crashed in September. I was laid off in March.
Got it.
So it was kind of like,
it's like a rerun almost of like where we were, where we are right now.
Yeah. I mean, but I will say the difference between now and, in 2008 is that we kind of had like a really, how do I explain it? We had like a short time period. It was kind of like, when you have your Band-Aid and you're like, oh, I'm hurt. I'm just going to rip off the Band-Aid. Like that, the Band-Aid was ripped off in 2008. Here, the Band-Aid is just kind of staying, and we're just pulling away at it. And we're just kind of like, yo, when is this going to stop?
That's a great way to describe it.
So that's where we are now, because it's like we don't have an endpoint until they get the virus under control. We're not going to have an endpoint, and we're not able to kind of like, how like when there's a fire, like you can't really deal with much if there's a fire. But once the fire is out, they kind of did whatever they need to do to get the fire out. You're like, okay, now we can assess the damage, but we can't even assess the damage because the virus is still going.
Right.
So that's kind of like that big picture. But to kind of go back to the question that you asked at first, you're like, well,
I'm like hopping around, but I really wanted to know that.
What should people be doing? It's like, you need to be educating yourself. Like, this is a great time to learn. Like, the circuit breakers went off, I think 3 times. So just to give you guys an idea of what a circuit breaker is. So basically, when, I don't know if you've ever run your blow dryer, the microwave, the curling iron, all at the same time, basically on the same kind of circuit. The circuit's like, oh no, we're overloaded. Pop! And everything shuts down. You're sitting there in the dark with, half blow dried hair, in the dark. And you're like, darn it. So that's basically how a circuit breaker works in the market. So when there's so they basically have levels. There's 3 levels to the circuit breakers. And everything is off of that. And people are like, oh, a circuit breaker, does that happen all the time? No. it's like a once in a, I would even almost say like a once in a lifetime thing or a once in a lifetime occasion. And it happened 3 times in like 3 weeks. That's crazy. So I share that with you, that background, to say, this is a great time to learn. So let me back up what the circuit breakers are, because people are like, what? I still don't get it.
Yeah, I'm like, circuit breaker.
Tell me more. So basically, when people are selling, so think of it this way: when people are buying, stock prices are going up because demand is going up, and when people are selling, stock prices are going down because demand is going down. Okay, so there we are. We have that kind of concept. Right. So when people are starting to sell quickly, that's when we call a market crash. Like, that's how a market crash happens. So they said in, I believe it was 87. It was Black Monday. The market crashed. I think like it went down 20% in a day. And that's like unheard of.
Black Monday, by the way. Have you watched that show?
I haven't.
Oh my God, girl, you got to watch that show. It talks about the crash in 87. By the way, everyone on here, it's great education. Mm-hmm. Go see what goes down in the market and compare it to what's happening right now. But continue.
So yes. Yeah,
oh no. No. Come back to us. Come back to us. All right. Courtney, come back. Okay. She seems to be having trouble. Can everybody else see me though? Throw some fingers if you guys to get back in here. She's left, so she's gonna come back. There she goes. All right. She's coming back, y'all. Don't worry.
I'm so over this.
Listen, it's all right.
My whole, like, and it's so funny. So I have a completely different story. I have a Peloton, and Peloton has been having like issues all week with these live classes because they've been doing Peloton classes live from the instructors' homes. Right. So Alex Tucson, I love him. He's like one of my favorite instructors. Like, he's been having problems. He was having problems with the music. He's been having problems with this, that, and the other thing. Hilarious, but I feel like Alex. I don't feel like Teddy. I feel like Alex, because I'm like, because Alex is a competitor. He is like on it. He's just like, we're just going to rock out until like the music gets it together. Yeah. And so I share that to say, you know, it's kind of like, that's what I feel like. But anyway, girl, I don't even know.
We're back. We're back in here. We're back. We were talking about the crash of 87.
Oh, the crash of 87. So anyway, so we said when the stock prices are going up when people are buying, and then stock prices go down when more people are selling than buying. So stock prices are going down. So there's basically levels to this. So, you know, one of the things is that they're trying to basically control the way the market falls. So after Black Monday, and it dropped 20% in a day, they were like, oh no, never again. This is not going to happen.
Right.
So we have to find a way to kind of protect the market, because people are very emotional. You know, the market is made of people. People are emotional. People get scared. They're like, oh my gosh, oh my gosh, oh my gosh.
I mean, you see that now. You see so much volatility right now because it's an emotional roller coaster that we're all
exactly. Yeah. And it's just like, okay, guys. So they said, like, if the market falls 7%, we're going to have a timeout. Everybody go to their corners. Y'all chill out, and we'll come back in 15 minutes. So that's the first thing. So then they have another level, and they said, okay, if it drops 13%, again, time out. And this is, I should say, the numbers are based on the day before the S&P. So the S&P, there's 3 indexes. There's Dow Jones Industrial Average, or what we call the Dow. So when they're talking about the market, they're like, they mean the Dow, which is 30 stocks that are, I should say, 30 companies that are indicative of the U.S. economy. So everybody's watching that. Mm-hmm. Then you have the S&P 500, which are the top 500 companies that are traded in the United States. And then you have the NASDAQ composite, which are all the companies, doesn't matter what it is, traded on the NASDAQ. Those are the 3 we look at, but the circuit breakers are actually based off of the S&P. So it's the S&P closed the day before. So if it closes, the market drops 7% from the S&P's close, that's when the circuit breaker is going to happen. Then it's 13%. Then the circuit breaker is going to happen again. So it's basically like a timeout for 15 minutes. Everybody out, everybody go home, you know, chill out. You're drunk, go. So 15 minutes. And now we're going to say the market's going to reopen. Let's see if you guys got it together. And then if it drops in like 13% from the S&P, so basically another 7 or so percent, they're like, oh, you guys are drunk again.
I did not know they were doing that. So they are closing trading for 15 minutes in different pockets throughout the day.
It's called a trading halt. Yeah, so that happened a couple of times in March. Like, it was just like, oh no, because people were selling. Like, there were so many things going on. So, like, let's talk about
why. To avoid a market crash, they're saying we
correct.
Need to
and it can still crash, but it's basically trying to kind of stop the bleeding. So it's like, okay, stop. It's like when people are fighting, we're like, you know what? We're going to stop fighting. We'll take a time off, and then we'll come back in 15 minutes. And that happened a couple of different times. And like I said, that's like once in a lifetime things that doesn't happen on a regular basis. Mm-hmm. So people, like, that's kind of the things that you should be paying attention to. Everybody's excited about oil. Everyone's like, oh, I got gas. I filled up my tank for like $27. And I have like an SUV. And I was like, how did this even happen? But again, one of the biggest things is that everything's about supply and demand. One of the biggest things with oil and gas as that whole industry is that China was actually the biggest consumer of oil and gas. They were the biggest consumer. So what happened with China in January and February, they were shut down trying to deal with COVID. So basically they're now that the supply is not coming down, like the supply is going up, the demand's not there. So now they have a whole bunch of supply. Mm-hmm. So then Russia and Saudi Arabia were like, they're kind of the big players in the oil and gas space. And I said, so Saudi Arabia was like, listen, we got to cut production so we can kind of get this demand and this supply in order. Mm-hmm. We have to kind of bring down the supply so we can kind of even out and kind of regulate the prices. And Russia was like, no. Saudi was like, say no more, fam. And they kind of did their own thing. And then that caused the market to crash, which caused another circuit breaker to go off. So there was just like different it's not just, I should say, people are just thinking it's just COVID and the fear that we have around COVID, but it's not. It's because we are now in what we consider to be a global economy. That's the big deal. That's the big problem. So now there's so many different things that are affected. So like China, when SARS happened, and I think like swine flu happened, China was like maybe the 7th or 8th economy. And now they're number 2. Like, we're kind of like on the same level. So basically it's like the United States shut down. But when they started and they have a lot of protection because the supply chain for a lot of companies, like the iPhone that I'm on, the supply chain actually is someplace in China, like someplace a part of a company. They're doing some type of business. Like iPhone has like glass that's manufactured over there. The little chips for the phones are all manufactured over there. So it's like, this is a really big part. And now things are falling apart. So I think those are the things that are really important that people are. So now people are like, oh, it's the stock market crash, I'm going to get in. But it's like, they're just jumping in like, I should buy oil. Well, you shouldn't buy oil and gas until the supply situation clears up, because if not, it's going to keep dropping the price of oil. So you're going to get in at $10, and the next thing you know, it's going to be $7. So you lost $3 per share or per barrel or whatever you want to call it, whatever you invested in, because you can invest in futures, you can invest in oil and gas ETFs, and you can invest in oil and gas companies. So there's a couple of different things that you can invest in. But the real big problem is that, like, you don't know when we're going to clean up this mess.
So what is your thought? To pause? Is your thought to pause?
On oil, like specifically on buying oil. Okay. Like, that's where I'm like, just stay away from that.
Don't be hyped just because the prices drop. Chill for a second.
Right. Okay. Because again, if this was like after the fire was done, we're like, okay, the fire's done. We're able to assess the damage. All right, that's a different conversation, but we're still in the thick of things. So that's the first thing. Okay. So we're kind of like, all right, well, what are we looking for? So anytime that you're looking at a recession or some kind of like economic downturn, you're saying, okay, well, you're going to look at consumer staples. And we're like, what's a consumer staple? Makeup is a consumer staple. A woman, and this is not to be like anybody who uses, I'll say makeup. A lot of people are like, okay, I'm still going to get my red lipstick. I may cut back on something else, but I'm still going to do my makeup because this is a part of who I am.
I'm happy you said that, because I actually just made an investment, not just recently, maybe about 3 weeks ago. I actually have to check it to see where it's at, in Ulta. I was like, oh no, honey, women at home? Oh no, we buying makeup. Sales at Sephora? Oh no, we buying makeup. Like, that's the demand is still there. Like, you see it. So I'm glad you said that. So you're saying right now is the time to invest in those type of things. Mm-hmm. Okay.
So those are the companies, but it's not every company may be a move. Like Coca-Cola's having some problems. They're having some, because a lot of, so if you, for a great example, like one of my favorite, so let me back up. I'm keto, so I haven't had sugar in such a long time.
By the way, I need everybody in here to throw hearts because you lost like 50 pounds, right?
I have.
You go, girl, because I know that is not easy. So congratulations to you. Everybody throw some congratulations in here to Courtney because that is amazing. But really quick, I want to make sure people are clear. So when you say, what was it you called? Consumer staples?
Consumer staples. So what a staple is.
Okay, so that's beauty.
That's you like, have like toilet paper, you know, like things that are cleaning, like all of those things. That's kind of what consumer staples are. I mean, we could go through a couple of them. Clorox is a consumer staple. It just depends on the type of company and what they're offering. But for example, Coca-Cola is considered a consumer staple. But here's the problem with Coca-Cola. If you and I both know, is that Coca-Cola is all over the place. I was saying like, yeah, I'm keto because the Coca-Cola machines, the red Coca-Cola machines where you can make your own and mix your own Coca-Cola drink, like that was my favorite thing. But if people aren't going out to eat, what do you think is happening with their, the actual production and people consuming Coca-Cola and in that way? It's not going well because people aren't, so the things that we're used to happening in a recession may or may not be the case. So people are saying like blindly, I'm going to invest in blah, blah, blah. And it's like, well, did you figure out what's going on with that particular company? Do you know what's going on in this kind of particular space? Because that's the real problem and the things that you want to deal with. Because it's not like, oh, I'm just going to go jump into a company. Like, no, you got to do really have to do some things that you have to do your digging.
So where should somebody start? Like if they want to make an investment in a particular company, what should they do first?
I tell people to get started, make a list of 10 companies that are 10 products that you use on a regular basis. Because I tell people to be an investor, you have to know the company. You have to know the company. So when I start there, I say, okay, I have an Apple computer, I have a Ford SUV, and what else? I have an Apple computer, I have an Apple Watch, I have an Apple phone. It's like really ridiculous. Or I have a Ford SUV, I go to Starbucks, I mess with Target heavy, like kind of making a list of all those companies. And then it's kind of say, okay, well, in this, does this company make sense to invest in right now? So my question is to myself is that and the thing is that the worst thing that I've noticed about women investors is that they're really good investors, but it takes them a long time to get in. Always. And I'm like, you kind of can look at a company and be like, that company's not right. It's just like, it's just kind of instinctual. So I'm like looking at Target. I'm like, okay, Target is still popping. Okay. Because Target's considered essential. Got it. Okay. Now what's going on with Starbucks? Their coffee shop, they did drop a lot and then they came back up, but their coffee shop kind of format doesn't really work for social distancing, right? So it's kind of like, then I start looking through my list, like, okay, is this a really good time to invest in it? And if their coffee shop model doesn't work for social distancing, maybe this is a good time for me to invest because maybe I'm getting a good price. But you also have to look at what the price has been over the last year. So when you say you look at the 52-week high, you're looking at the 52-week low. You'll see that on Yahoo Finance. It tells you 52, it'll give you a range. So it'll give you like $79, like $50 on one side, and it'll say maybe $90 on the other. And that's your range for the year. So you're like, okay, well, it's $75. So it's $25 above the low. Well, is that a good price or is that a bad price? And sometimes that's a price for you personally saying, do I want to spend $75 for a share of this company or for a piece of this company? Do I think it's worth it? So that's kind of more or less what you're thinking as an investor. And when you're thinking about as an investor, you're looking at the long term. So I tell people all the time when we're talking about investments, I want to know not only is the company good, but is the management good? Because I can have a really good company and crappy management, or good management and an okay company, and still, and that's going to determine how the company goes. Like, does anybody, if you guys remember The Simpsons, the bus driver, the crazy bus driver? Yeah, like that's kind of what I think about some of these companies in these streets. It's like your bus is cool, like it's okay, solid, sturdy, but you got this nut at the helm, And I'm not saying the CEOs are nuts, but it's just you have to look at
very familiar. A much bigger
platform. You're like, curious. So you really want to make sure that you have the right leadership in that company. And so I look at the company, I say, okay, and my first real question is, this is what I mess with. These are the things that I start with just to get started. And then the next question is, can I invest in them? Because not every company that I may use their products can I invest in them. Like, I love a Denman brush. Denman brushes are great for curly hair. But the thing is, Denman is owned by a company, I believe, in like United Kingdom, and they're privately held. So I can't invest. I don't care how much I like the company or how much I like the product. I still can't invest in them. So now my next question is, once I have my list, is that, is this company publicly traded? Can I even, as a regular person on the street, can I invest in this company? That's my next question. And it's like, okay, now that I know if I can, so if you're an East Coast person, I'm a Wawa person. So Wawa is not publicly traded either. It's a privately held company. So I may rock with Wawa heavy. I may get this coffee and get my gas and keep it moving. But if I can't invest in them, then it's like, okay, fine, I can like them all I want. And that doesn't mean I'm going to stop going to Wawa, but it's also kind of like, okay, they're off the table now. So then I start looking at things and saying, okay, Starbucks I can invest in Target, I can invest in all these places. Now my question is, how much do I have in my pocket? How much do I have available to? It's kind of like when you're going to the supermarket. Like, you're like, I have $100 to spend. For this dinner party, are you going to get cheese, crackers, meats, whatever? Are you going to get that $85 caviar and try to make it work with the rest of the $15 you have? That's not really what you're going to do. So the same thing with investing in the stock market. If I have $100 to spend, I'm going to try to get the best bang for my bucks. I'm trying to get the best company at a good price for my pocket. So I may invest in a company that I think is a good company that has longevity. Then, okay, you're $20 a share. Now I can get 5 shares of you. I'm not going to invest in a company that's $100 a share because I only get 1 share. No. Like, you want to get the most companies for the money that you have in your pocket. And the other thing, you want to be consistent. A lot of people are like, oh, this is hot now, I'm going to invest in it now. Like, no, investing, like, I love when people say like excellence is a habit. So is investing. So it's like, okay, I'm going to invest the same amount of money. It's called dollar cost averaging, where I'm going to invest the same amount of money into this company however. So I don't care if it's $1 million a share or $3 a share. I'm going to continue to invest. So over time, it averages out. So it's, again, about picking those companies early on and then investing in them over time. So it's having that. And it's not rocket science, but here's the thing. It's not rocket science, but it's also not taught in schools. So, so it's even the concept of understanding like how this should go. And then it's also like, well, where should I put the money? Like, should I put it in my retirement account or should I do it in another account? So I tell people, it's like you have a couple of different accounts. You have your retirement account, which is for your future life, but you have your investing account, which is your taxable, kind of like a savings account, but it's not FDIC insured. But that's your best life account. That's kind of the account that's going to upgrade your life. There was a guy in Detroit. He was an older gentleman. He was making like minimum wage or maybe like $11 an hour. And he had a stock portfolio when he retired of like $500,000 because he was consistent. It's about being consistent. It's like you do the work up front and then you're just consistent. You're like, okay, I rock with these companies. I'm going to rock with them. And that's what I'm going to do. That's it. Easy peasy. So, and that's kind of what I like to tell people is like, okay, fine. And they're like, well, Courtney, how do I know when I'm going to sell? I'm like, I keep companies forever unless you show me your sign. Like, oh, what you doing over there? Like GE. General Electric was a company that I purchased like right after the market crash. Purchased them right after market crash. I was like, okay, I rock with GE. They were relatively well run. And maybe now it's like 5 years ago at this point, maybe 3 or 5 years ago, they were like, yeah, GE's losing money. And I was like, okay, GE's losing money. That kind of makes sense. It's an old company. So you're like, okay, I can see kind of them not pivoting or whatever. And this is why management makes a big difference. Like your management's ability to redirect or pivot your company will kind of either kill you in the market or, kind of raise you up to the next level. So put that in perspective. So they were like, but GE was like a really big dividend company. And dividends, for people who don't know, is a distribution of profits and earnings. So if you're losing money, you should probably, at the minimum, reduce your dividend or actually completely get rid of it. Because if you're losing money, you have no profits and earnings. But GE did not reduce their profits and earnings. And I was like, that's curious. what y'all doing over there?
Right.
You should probably have not given dividends if you really. So now I know that you're pulling dividends from debt. Mm-hmm. Oh no, this is not sustainable, guys. This isn't sustainable. So you know what happened? I sold GE. And you know what happened right after that? I think maybe about a year and a half later. I'm sorry, I have allergies. They actually, about a year and a half later, they ended up cutting their dividend and their stock crashed. Like their price went kaput because everybody was like, well, I've been messing with y'all because of this dividend. And then you got rid of the reason why I messed with you, I'm out. So again, it's about, that's kind of when you're paying attention. I don't watch the stock market. I don't, unless I'm trading, unless I'm doing options, I'm not watching the stock market every day. I'm just not, because I'm actually investing. But when
let me pause you real quick here, because you drop in major gems right here, and I want people to you know, kind of absorb this information. So we heard that you want to always buy low, sell high if you need to, but the thought is always to go in as a long-term investor, right? Not as a flip-flopper, right? You're going into your top 10 or your top 20 companies that you use, that you believe in, right? You believe in their story, you believe in their mission, so you have an attachment. This is your investment. This is like a real thing, right? So you have to act like you are truly an owner, because that's what you are. You are now an owner of this company. So you can't just invest and forget about it. You want to keep your tabs on it, right? And you want to know what is going on so that if you do need to sell or you need to pivot as an investor, you can. So I wanted to make sure people were understanding and taking this summary in, because there's a lot of great things that you are dropping here. Because a lot of times people feel like, oh, I'm just going to invest in this and forget about it. And that's how you lose money. Right. You know what I mean? You want to be a smart investor. You don't want to just invest in things just for the hell of it, especially right now, which is what I want to get into, is because people are really paying more attention to their finances right now. Some folks might be strapped and they're just really thinking critically, is investing smart for me right now? Is this something I should do even though I feel strapped? Should I still make some type of investments in the stock market?
So I think there's a couple different things there. If I feel strapped. So if you don't have an emergency fund, if you don't have money set aside for an emergency, you shouldn't be putting money into the market. Like your first, it's kind of like your first thing is to make sure that your house is secure. So you want to make sure that you actually have an emergency fund before you do anything else. Because the stock market, as we know, we can see it. It goes up and down all the time. So if I put in $1,000 today and it's my only $1,000, next thing I know, it's $900. You're like, okay, it's $900. All right, cool. But then you're like, well, wait a second. I really need that $1,000. So where you gonna come up with this 100 if that's all you have? So that's why it's like, listen, get your emergency together. At the bare minimum, I say about $1,000 to $2,000 about in your emergency fund that's taken care of. But depending on what's going on with you as a person in your personal life, that may be more. Like some people are like, hey, you know, I need to at least have like 6 months of savings that I don't touch before I go investing. It depends. Like everybody's situation is different. And I think one of the biggest things that I've noticed about people being like, it's kind of like everybody's watching the Joneses, but they don't know that Joneses are broke. Like you really have to kind of figure out what is going on with you. What do you need as a kind of like, think about yourself as a business. Like, okay, what do I need to keep my business running? Okay, I need to at least know that if something happens, I have my money first. And then you're like, okay, then if I'm trying to live my best life, and here's the other thing, I'm trying to live my best life. Remember, I think about my best life as my investment account. So I'm like, okay, that's my best life account. Well, how am I going to have these Gucci pumps on and I can't pay my electric? Right. So think about it in that perspective. And it's not telling you that you can't do it. It's just about how do you plan to do it? You're saying, okay, now I have my emergency fund that's taken care of. I have it now. I don't expect people to pay off their debt. Like I expect you to have a debt management plan though. Like to say, okay, in 3 years, I'm going to have my debt paid off or whatever the case may be. And it's like consumer debt because student loans are a little bit different. But consumer debt, like, hey, I want to have this paid off in XYZ amount of time. But like I said, investing is like a habit. So again, I'm going to have a little portion of my once I have that baseline emergency account, I'm going to say, okay, a little bit of this money is going to go into my best life account. And as I reduce my debt, my best life account, I'm going to start moving that money into my best life account. Mm-hmm. So then that's kind of the move. But I always want people to kind of think about the future because debt already happened. It's, we've already done that. I don't want you to focus there. I don't want you to dwell there. I don't want you to do the backstroke, and kind of what you did before, but I want you to take care of that. But I also want you to look for the future. So that's kind of the continuum of like what you should do at the bottom and then kind of work up from there.
So my follow-up question to that is, now everybody knows, don't invest if you don't have your house in order, right?
Mm-hmm.
This is not a get rich tactic, right? This is something you're going to invest in the long term. So it should be money that you won't miss if you
Right.
put it in the investment account.
Mm-hmm.
So back to the volatility of the market right now. For those who can invest right now and are looking for opportunity, do you recommend that they invest now, or do you think they should wait, given that there is so much gray space right now in the market, a lot of ambiguity?
I think that they should invest now. I think it's about getting yourself into the habit. And there's always going to be an opportunity, but it's about also understanding where the opportunities are. I tell people all the time, take my class so you can kind of see what's going on. I tell people all the time, like medical services, look at them. Who's paying attention to anything right now? It's the how we're paying attention to the hospitals. We're paying attention to all these things that have to do with medical. We're looking at pharmaceuticals. We're looking like, all right, who's going to get the next, COVID test or cure or whatever. So we're really focusing on the medical sector. So again, looking at those companies, but I always suggest looking at companies that you understand. So if I'm a nurse and I'm like, my mom was a retired nurse. So her thing was, she was like, oh, I really like BD needles. And if I know I don't have a BD needle because she did dialysis, she's like, I'm going to have a bad day. So that being said, so of course, if you see BD is kind of, you're like, and then you're like, oh, BD is, at its around its 52-week low. Well, maybe I should invest in that. But it's not necessarily that I should stop investing, but I should be careful about what I'm investing in. So educate yourself. Like I said, like early in our conversation, this is kind of the best time to learn because you're starting to see things that probably we hope, never happen again,
Right.
So that's kind of really the thing. But educate yourself is the biggest thing. Education is by far the most important thing ever. Like by far, I can't, I mean, an educated investor is a good investor. And I can't emphasize that enough. A
Right.
lot of people just don't they really kind of overstep the education part and don't stop rushing. Like everybody's like, I gotta get in the market. There's going to be another opportunity. There just is. Now, it may not be the opportunity that you thought that existed or that you think it should be, but it's going to still be an opportunity. And they feel like if I miss that, it's kind of like bus. Like another bus is going to come. It's not going to be that bus, but it's going to be another bus.
Mm-hmm.
Let's not kind of get ahead of ourselves.
Right. There's something I want to add here because I think it's important and really backs up your point around research. Another way to look at this is not only will it make you an educated investor, but it would make you intelligent in the sense that when you're having conversations with successful people or people who you may look up to in terms of where you want to be successfully, right? Most of the time they're making investments, right? They're invested in something. It may not be them, it may be their account manager, but I can guarantee they know what it is and they can speak to it. So as you're thinking about right now, as you're networking online, as you are continuing to build your network, which I hope you guys are doing, all of this research is not only going to make you a better investor, but it's going to make you a better professional. So there's benefits all around, and I don't want you guys to not keep that in mind about how much value added is for you to become an educated investor and just understand, even if it's just the basics, but you're doing something and able to have a conversation about it because it will allow you to become a Renaissance professional. So the next question I have for you is around, so should people invest in a trading account versus their retirement account right now? Do you have a recommendation of what they should pay attention more to? And also, do you recommend any organizations that they should actually house their portfolio at?
Okay, so that's a lot. So my first answer is that so I think there's always a place for investing and investing in different places. So I think I personally have an account that I trade. I have, and which means I'm actively traded in the market, and I don't do it all the time because sometimes I'm just like, I don't feel like being bothered. But then I also have my retirement account. So it just depends on what the purpose of that account is. Now, can you trade your retirement account? You sure can, but you really need to work with somebody who knows what they're talking about and educate yourself. And that person ain't me. I can teach you how to invest, and I can teach you how to invest for wealth. So I retired. My mom was bankrupt in 2000 and I think she started her bankruptcy proceedings, I think in 2001, kind of started the whole process in 2002. And she said that she wanted to be retired. She was 52 and a half, and she wanted to be retired by 65. And she had nothing. She had a mortgage on the house. She had a car. She had all these other things. And she's like, I want to retire. I was like, oh, geez. I was like, I don't know. But we were able to get her retired. So she's comfortably retired. And it took us about 11 years to get her completely straight. House paid off, car paid off, everything's paid off. And now she's also living a comfortable retirement. So I guess that's my example of, I can teach you how to invest for wealth, but trading, not my thing. But Terry, Invest with Terry, she's one of my favorite people. She's a great teacher, but she teaches people how to trade. But I tell people all the time, 95% of traders actually lose money. And part of it is that they don't have a system, and that they are over emotional. But if you can actually get with somebody like Terry, that is and that's something you're interested in. A lot of people are just like, yeah, I just really want to just, have an account, put some money in it, watch it grow, and that's it. And if that's you, that's cool. And that's amazing. But unless I guess to put that in perspective, so that's kind of the first thing. So yeah, you can either trade or invest. You can do both. But if you're going to do either, you have to be educated about it. So that's the first thing. The next thing is, I think you asked about where to have these accounts. So it depends on what you're trying to do on the account. So I love Robinhood to kind of teach and learn. Like, that's where I teach my students to just kind of get the concept. But Robinhood doesn't offer retirement accounts. So if you want to do a rollover of your 401k or a previous retirement account, you can't do it at Robinhood. So maybe you want to do, I like ETrade, I like Ally. Those are the ones that I really like generally. Those are companies that I'm like, okay, because I really like teaching people. I want you to have something that's intuitive, if that makes sense. And sometimes it's just, some of these other accounts are just, they have something for everybody, but it may not be for what you need. So I like Ally and ETrade because they're easy. So Terry's IG is I am an investor. So yeah, so it's I'm an investor. So it's IMANI investor. Yeah. So I was like, so that's that's the big thing. So I absolutely love Terry. I'm trying to see if I can get her information up on my page. She's on my page somewhere, but she's awesome. So, someone said, does Terry teach as well as I teach? Yes.
I love this. This is why, this is why this series is important, not only to educate, but this right here, this organic celebration and promotion of women is so important and is so much a part of this Women Who Roar series. And that's why I knew, having Courtney on, you're my type of gal to have on this series, because it's those with that mindset, like, I'm going to promote Terry, even though she's kind of aligned in the same industry as you still going to make sure you send people her way to check her out because her expertise, right? So right. I love that you just did that. Thank you, Courtney. So we're running out of time, and I don't want to lose momentum on this. So Robinhood, great app for you to learn if you're new. And about the retirement versus like, if people have $1,000 right now, would you recommend they put that in their retirement, or would you recommend that they put that in the market in a regular trading account, as an example, if they just have $1,000? And I know that's hard because everybody's position is different, and it really depends on what your personal situation is with your money. But I know there are a lot of people who are thinking like this, like, I got $1,000. Where should I put it? What should I do with it? Not really understanding the background that they need to kind of go through to make a smart choice. But if they're new to this, they have $1,000 to burn, what do you recommend?
I would probably put it what we consider a taxable account, so not a non-retirement account. I would probably start right there. And the reason being is that I think I want people to really just get into the market. So you have $1,000, burning a hole in the pocket. Okay, put it in the market. It's burning a hole in your pocket, so you probably don't need it. But I also don't want people to neglect their retirement. Because a lot of people are like, oh, I ask people, they're like, I want to invest in stocks. Just send them a list. Oh, I'll live your best life. And they're like, oh, I want to put it in my Roth. And I'm like, okay, well, do you have a Roth at work? They're like, yeah. And I'm like, are you using that at work? And they're like, no. And one of the things that I try to explain to people is that your employer accounts actually get more protection than a Roth IRA. And also you can put more money in a Roth employer account than you can in a Roth IRA. And if you make too much money, you can't contribute to a Roth IRA. So I tell people, do work.
They also match you, which is huge.
Correct. A lot of companies will match you, but even if your company doesn't match, you're usually better off, unless your company plan is very expensive. Haley, you're usually better off in your company's plan if you're investing for retirement. But if you're not investing for retirement, then, don't invest for retirement. Put that in your best life account.
Got it.
Like, use that and then kind of start from there. And then a lot of people have been asking like about Terry. I put Terry's link in my link tree. So once we get done with this conversation, you can go head over to Terry and learn how to trade with Terry. She's an awesome, awesome teacher.
I love it. So my next question is around you personally, because I am really inspired by your story, and you are doing the damn thing, have your full time, and also teach women how to invest. And I want to talk a little bit about that. So right now you do corporate law full time 9 to 5. You have the Ivy investor on the side. So how is that managing those two? Because I know there's a lot of people who aspire to have the side hustle success and also do the full time, or people who are thinking about leaving the full time and going the other way. So can you talk a little bit about that and how you manage it?
It's hard. I'm going to be very honest. It's very hard. And because so when I worked in government, so I used to, like I said, I worked in government directly, and government has a shut-off time. As we know, you try to call the IRS at 5:05, they're like, oh no, we're not here. We left.
Right.
So same thing. So with government enforcement, my day was over at 5 o'clock. Now, sometimes it was over at 6:30, 7 o'clock. It just depends on my workload. But for the most part, my day had a cutoff. When you're now kind of working for a firm, my day doesn't really have a cutoff. It kind of bleeds into. So one of the things that I kind of have made, and I had to refocus because I actually took a new job in September of 19. So I had to refocus and say, okay, how much time am I going to spend on my business per week? And then I have to say, when am I going to put that in? How am I going to fit it in? So you have to be very organized, and sometimes I'm not organized. And also you have to automate a lot. I haven't really done a lot of automation on the level that I would like to. One of the things I've noticed is that people don't care if you have a 9 to 5, and they want to answer, and they want to answer then. So sometimes it's kind of like I'm looking at a phone. I'll look at my phone in my business email, like, I really need to answer that question. And so, I'll have to stop what I'm doing on my 9 to 5 to answer it. But there's certain things that I kind of will say, okay, you're going to get an answer at 5:05 when I'm not working my 9 to 5 anymore.
Right.
Because I try to be, as a business owner, I want to respect the other business owner's time. Like if I'm on your clock, I'm on your dime, then I should be producing for you. When I'm off your clock, then I should be producing for me. But I also can't overwork for my 9 to 5 and underwork for my business. So
Right.
I have to kind of keep that balance. And in honest to goodness, it's really never a balance. Like sometimes it's going to be more here, sometimes it's going to be more there, and you kind of make it work. But also having goals. My biggest thing is having goals and saying, okay, this is what I'm trying to do for this quarter. This is what I'm trying to do for this month. So that kind of keeps me in focus to say, okay, all right, I need to really do this thing. This thing needs to get done because this is on my list kind of for my bigger picture. Mm-hmm. So that's how I keep myself in line. I also kind of have my little book to say, okay, I have this going on, this going on, this going on. And then every time that I do something, I try to have a purpose for it. So I just don't do things willy-nilly. So when I met with you last year and we had the great conference that was and I don't know if you caught it in my Instagram, when Sabrina said, if you don't your weaknesses will kill you, is basically what she said.
Right.
And it really resonated with me because one of the things that I was weak is my mom actually had cancer. So I was taking care of her. I was being her caretaker, and I really let myself go. And kind of being sharing that is that a weakness is that I wasn't prioritizing myself so I could show up other places, and I started to show it. So that's kind of one of those other things as being a priority, because I have my life goals, I have my business goals, and I have like my 9-to-5 goals. And I try to make them work, and not all of them are going to work. And that's another thing. I'm okay with not getting everything done. I'm okay with saying, okay, well, that didn't work out quite the way I wanted to, but we're going to go ahead anyway. And I think fear of failure will stop you from being successful. Like fear of embarrassment. People are like, oh, I'm so embarrassed. About what? For what? Why? What's going to happen? I mean, there's a lot of things that when you're moving, like even when you're driving, like when you're driving a car, sometimes you may hit a curb.
Right.
You're like, oops. Sometimes when you hit that curb, it's cool. You're like, oh, whew. And then other times you hit that curb, you're like, did I just mess up my rim and my tire? And that's kind of business.
Mm-hmm.
That's business too. Like, okay, sometimes I may hit a curb. It may not be that bad. And then sometimes I'll hit a curb and I'm like, that's going to be an expensive mistake, so that's life, and you keep moving forward. And then I can actually tell somebody else about it also. So I can do all of those. Someone said it blew my tires out. Listen, I used to have this car. My Benz was
Girl, yes, that front tire in the front, man. Oh my God.
My goodness. It's like, do y'all do this? Because I mean, it got to the point
we
where
didn't invest in Benz, man, because they got us out here with these tires.
I know.
The tire companies, we got to invest in. But listen, we have 2 minutes. And I ask this question of all my guests, is why are you a woman who roars?
Because I found my voice. I'm a woman who roars because I found my voice. I allowed myself to be authentically who I am, and I was able to show up who I am, and that made my voice amplify. So that's what caused me or allowed me to roar. It's just kind of like, okay, I am who I am. Here we are, and I'm going to rock out like this.
I love it. And that is a great way to end this talk. Yeah, go be roaring investors. Invest in yourself, not only the stock market. So shout out to everybody who joined in tonight. Shout out to you, Courtney. Thank you so much. You shared such great information. Make sure you guys follow her. And I appreciate you, Mama. And I'll see you on the outside.
All right. Sounds good.